Hi, what's up guys, your boy Gaddy here, back with the next part of my series where I'm teaching you guys my entire trading system. So we're on step 4 of the trading system, which is identifying a trading model. So in that step 4, we've already discussed step 1, 2, and 3, which is the 930 Judas, the market maker model, and the daily candle power 3. If you haven't seen my last videos, I really recommend them because I put these in a very specific order. So if you're going to be skipping videos, you're going to be missing out on information because I'm kind of carrying on. And this is kind of how I go about my trading. So today we're going to be talking about Silver Bullet, which is part 4D of my trading model. So let's get straight to the charts. Okay, so the first thing I want you guys to understand is why Silver Bullet. So for me, I'd be trading the 9:30 to 11:10-ish time frame or time window. That's where I place most of my trades. Now, the 10 a.m. to 11 a.m. candle, so that hourly candle, which is also the start of the 4-hour candle, tends to have the largest amount of movement. So I've marked out, just randomly went to some part of the chart. You can see I've marked out all the 10 a.m. candles, and you can see how sometimes they have the largest move. I mean, this one has 500 points, and all of these candles. And even if you go today, which is where the example we'll be showing you guys for the Silver Bullet, you can see that the 10 a.m. candle seems to be pretty one-directional, a very typical open low high close or open high low close candle. So we're going to be covering that candle. So before I get into examples or anything, I'm going to go over the notes so you guys can understand what exactly Silver Bullet is. So into the document, going into Silver Bullet. So my criteria for the Silver Bullet model is obviously first, if you've been paying attention, is to identify a clear drawn liquidity and directional bias for the 10 a.m. candle. Now notice this doesn't have to be bullish bias. This doesn't have to be daily bias or the weekly bias. Just for the 10 a.m. candle, right now at 10 a.m., based on what's happened prior into the day or prior into the week, where do I think this 10 a.m. candle or this specific time window is going to be doing? Okay. The next step is opposing liquidity has been taken prior to a fair value gap being used. So once you have that bias, I want to see that liquidity was either taken prior to the fair value gap being used, or like liquidity is going to be taken and then forming a fair value gap. So the next step is a fair value gap formed in the direction of the drawn liquidity, and then the preferred asset has to validate the setup. This is a rule I've added to all my trading models, and I will explain just exactly what that means. And then for entry model, you can use any entry model from 1 to 6. And then for trade management, this is kind of what I do. So this is a brief example. So narrative is established bullish order flow from 10 a.m. to 11 a.m. You can see that we've kind of had this smart money reversal, and we have these relative equal highs up here. So using this narrative and directional bias for the 10 a.m. candle, right? Let's go through our checklist. Has opposing liquidity been taken? Yes, right here and here, right? All the sell side has been taken. So from 10 a.m. to 11 a.m., liquidity has been taken. Now we're looking for a fair value gap to form after liquidity sweep, which is here. So your first fair value gap, not your first one, but in this case, it happens to be the first one. This fair value gap is your Silver Bullet fair value gap. It's the first fair value gap that formed after 10 in this specific case, and it's formed after liquidity has been taken. You have your clear directional bias over here. And then for the last step is the preferred asset validates the setup. What do I mean by this? So this is using relative strength in the charts. So you're going to have obviously NASDAQ and the S&P both being assets. And you're going to want to make sure if you're taking a long that the stronger asset between the two is framing the long, right? Because it's leading the other asset. So if you're bullish and the NASDAQ is more bullish than the S&P, your Silver Bullet needs to be forming on the NASDAQ because it's leading, right? You don't want to see strength in ES and weakness in NASDAQ if NASDAQ is the one that's stronger. So you want to be making sure you're prioritizing the preferred asset. Now, you don't have to trade the preferred asset, but you need to make sure it's aligning with the trading model because that's the one that's leading the kind of correlation, all right? So let's go in for an example from today that we took a trade, and we'll cover exactly what happened. So this is from today. So let's go to the 10 a.m. window. We'll drop down to the 1-minute charts, and we'll see what's happened here. So just for simplicity's sake, right? I'm going to mark out the 10 to 11 a.m. window with these blue lines. Now the 10 a.m. silver bullet, it's an amazing model. It's something I look for almost every single day. And the reason being is it, for one, can align with almost all of my trading models. And then two, it's the most easy directional way to get a draw on liquidity. And the reason I say this is because you're using the prior information from previously in the day. So looking at what pre-market did, looking at what 930 did, and then looking at London and Asia, you have usually a pretty clear narrative and context for the 10 a.m. candle. So let's see what happened here. So today we opened up, we went up, and then came down, took the sell side. So now that we've taken sell side liquidity, so right here, we've taken the sell side liquidity, right? Now, before I even get into more in this, if you haven't seen my daily Power of 3 video, I recommend you watch that because you're not going to understand what I'm about to say. And what I'm about to say is the reason we were expecting this to go up here in the first place was my daily Power of 3 video. I was expecting a seek and destroy type day. Why? Because of the large range in Asia and London. So we expanded overnight. I'm expecting New York session to be seek and destroy, right? Because net trades have been positive long. So I want to see not a large fluctuation in that profitability thus far, it being pumped overnight. So I'm expecting a range condition. Now it could have been a tight range, but given we had a large 930 Judas swing or a large 930 move, I'm expecting a large range. And you can see we got that kind of large range right there. And then we ended up coming back down. So now that we're at the range low per se, and we've taken out sell side, I'm expecting now a move higher. And then once we had that move higher, we expected a move lower. And this was all discussed in my live stream. I live stream every day, 9:15 a.m. Eastern time if you want to watch. But hopefully you guys understand why we were even looking for a short. It's because we took out the sell side and we're expecting a seek and destroy day. So that's your directional bias and narrative. So step one, opposing liquidity taken. That happened right here. Now we're looking for a fair value gap to form in the direction of the liquidity after 10 a.m. So 10 a.m. comes, that's your first fair value gap. This one can be valid. It can be, but let me tell you why it's not valid. It's because this candle is 10 a.m. So if you're understanding 10 a.m. Power of 3, and this is why I say the fair value gap has to form after. It's because the 10 a.m. candle opened right here, and it didn't put in a low. So you're waiting for an open low high close candle. That's the idea of waiting for the fair value gap to form after 10 and waiting for the liquidity sweep after. So this is your liquidity sweep right here after 10. So prior to this fair value gap being used, you want to see a liquidity sweep. So the fair value gap formed and there was a liquidity sweep here, but there wasn't one formed for it being used. So you're basically looking for a fake move. So this is your fake move. And I actually took this short today and I thought we were moving lower. And I realized quickly I was wrong, and I managed to actually catch this long, and it ended up playing out really nicely. So we had the nice setup here, and I thought this was a short, and then I realized quickly after that this is a classic silver bullet long. You want to see this fake move. You want to see it put in a low, and then take that low. So basically you're seeing this right here. And then what do you have here? You have the bullish fair value gap right here that formed, right after the liquidity sweep. So you have 10 a.m. open, wait for a liquidity sweep on the lower time frame in the directional bias, and then you have your fair value gap. This was the entry we took, and you target the buy side liquidity. It was a 3-yard trade. Now, what happens if you miss this trade? No problem. It's a continuation. You're expecting expansion. So don't expect it to come back here, take the low, and that's not going to happen. You're expecting a move to the buy side. Well, you have another fair value gap right here. You can take that. And this one's paired with the order block, so it's very valid. And if you didn't already notice, there's a big fat breaker block right here. So you have a, low, high, lower, low, higher, high. So this was the original breaker, but then you have the full leg breaker as well, which is here. So that's already paired up nicely, because then you're going to have a low, high, lower, low, higher, high, and that's your higher high. That's your high before the lower low, and then it pairs with this fair value gap and this one as well. But this one is forming after the breakers formed. So that's your unicorn setup. That's how you can get in the trade. And then if you look at the trade management, you can mark out the standard deviations of the breaker. So this lower breaker, and then also the higher breaker. So you can see -1 was reached pretty nicely. And we took the buy side. That's where we took our profits. We trailed the stop to the buy side in case we went for something external. but we didn't. And we ended up just taking all our profits around here. And then after, it kind of just went back into some sort of seek and destroy, came up, maybe took the high. That's not the point. The point is from 10 to 11, we established a clear bias, a clear draw on liquidity, a reason for that bias, which is our narrative. So why is price even going here? It's because we're expecting seek and destroy. So if we're taking out sell side and it's 10 a.m. and we have a fair value gap forming in the direction, go to your checklist, say, did we take out liquidity? Yes, we took out liquidity right here. That is a sell side sweep. And this is ES. I just switched the chart by accident, but there's your sell side sweep. Do we have a bullish fair value gap? We have one right here. Prior to the fair value gap being used. That's what it says in the model. So prior to this fair value gap being used, was there a liquidity sweep? Yes. If we had formed a fair value gap before without the liquidity sweep, then you're not even looking at the trade. It's not valid. Wait for the liquidity to be swept. If it just goes without you, it goes without you. It is what it is. The reason you want to wait for the liquidity sweep, so on NASDAQ it's right here, is because you don't want to be the liquidity sweep, right? Wait for the liquidity sweep and then wait for the trade. So for me, I like to wait for the fair value gap to form, but obviously there's a couple ways to get in here. You could have got in on the breaker. You could have got in on the inversion. You could have got in as a turtle soup here from the volume imbalance right here, going below 10 a.m. However you want to enter the trade, it's up to you. Me personally, I wait for a fair value gap. So this was the first fair value gap that formed after the liquidity sweep. And then you had another fair value gap right here that played off nicely. You could have pyramided there or just entered here, trailed the stop to this order block or the breaker or the inversion, however you want to do it. And your TP is at the buy side. You know it's going to come here with a very good probability, right? We held the trade all the way there and ended up playing out just back to the downside. So that was a good take profit level. Hopefully that makes sense for the silver bullet model. The last thing I want to say is just one key point about the silver bullet. Now, I feel like a lot of people don't understand exactly the power of silver bullets. The silver bullet's greatest asset or greatest strength, in my opinion, is the ability to understand where the 10 a.m. candle is going to go. And the reason I say that is because you have all the information from 9:30 to 10, so the opening range. You have information about the opening range gap. You have information from Asia and London and pre-market. You can see where the major buy side and sell side is and the minor buy side and sell side is after the opening range. And you know 10 a.m. is usually, not always, but usually going to offer some sort of one-sided expansion. So in this case, we had that one-sided bullish expansion. And then after taking the buy side, we came back and closed, but we still had that one-sided bullish expansion. Now, obviously, if you've been following the markets in October, it's been pretty difficult in my opinion. So be cautious of that, which is why I was showing the examples from earlier in September or something, because they tend to be a lot cleaner. I mean, look, for example, this 10 a.m. candle. It's very one-directional, right? So 9 a.m. frames the reversal. 10 a.m. usually does the distribution. Just look at the 10 a.m. candles on your chart. It's not something that is hidden. You can look at the 10 a.m. candles. Usually they're one-directional. And if you can identify the days in which they're one-directional, you can catch really nice, simple, easy trades, because all you need to wait for is a liquidity sweep and then a fair value gap to form in the direction of your drawn liquidity. That's it. A very simple model. Sorry about that. It's a very simple model. It overlaps with other models very easily, whether it's MMXM, daily power of 3, 9:30 Judas swing into 10 a.m. distribution. All that stuff aligns really well with silver bullet. That's why it's one of my favorite models. I use this. I look for this almost every single day. And if you want to add that to your repertoire, feel free to do it. If you have any questions, feel free to leave a comment below. Join my Discord. It's free. Watch my YouTube lives if you want. Watch me trade live. Also free. The next video will be an educational video on low resistance and high resistance liquidity runs. I know a lot of people who kind of get that mixed up. I watched the videos on YouTube about them. In my opinion, they're not well explained. A lot of missing information from what I've learned from ICT. So I'll be explaining that. And then after that, we'll go back into the model. So my PM1 setup for life will be the next model video. Take care, everybody. Peace.